Finance Friday time. Good to have Dave Skirman back on the show. First Ontario Credit Union for another edition of Finance Friday. I liked your tweet actually this morning. You're pretty witty sometimes there, Dave. On a cold day, I'll share where you can get a hot one-year deposit rate over 5%. So we'll get to that question in a second, because you do get a lot of questions from these segments.
Yeah, we get a lot of questions. So viewers, keep sending them in. If I don't answer it right away, don't worry. We keep it on a list, and if that topic becomes topical, we'll bring it up. And of course, you win a gift card. So.
Yeah, there you go. And mortgage rates are always topical. So let's start with the first one. Diane asked, with interest rates where they are now, should I lock in a fixed mortgage rate for 2 or 3 years, or do you think interest rates will start to go down sooner and I should lock in for 1 year or take a variable rate?
Well, good question, Diane, and a lot of people have that. Now, Tim, let's go back to a year ago right now. Fixed mortgage rates, 5-year fixed mortgage rates were 3%. And you and I have talked, and Annette and I have talked on Finance Friday many times when rates were that low to lock in. Why would you not lock in when you have a 3% rate? 60% of new mortgages a year ago took variable for the sake of a half a point lower. Now, most of them did that because they could buy more house, right? So they could afford it, they wanted to pay as much as they could for a house and afford as much as they could on a lower rate. And now they're suffering because of that, because now that fixed rate that variable rate now is close to 7%. So some people now can't afford their payments because they took that variable rate when rates were low. So obviously the idea is fix low, lock in when rates are low. Rates right now, Bank of Canada, as you know, raised the rates again last week. They said they're going to pause rates probably right now, but that depends on inflation. So if I was taking a mortgage out right now, I would probably go with a 1 or 2 year fixed rate. You're going to get it probably a little between 5 and 6%. Variable rate is actually higher than that right now. So a fixed rate, I don't think rates are really going to come down for probably a year, 18 months, maybe 2 years. So fix your rate in. You can afford your payment. It's not going to go up. And then take it after that.
I have so many more questions on that, but I want to get to the second question here from Maggie from Oakville. So I'm planning to put some money into non-registered GICs for 1 year and switch this money from my regular bank to an online bank. My question is, if I have 5 GICs with one of these banks, will each GIC be insured up to $100,000? Any information on these online banks would be appreciated.
Well, thank you, Maggie. And again, some people might be wondering, okay, well, why is Maggie taking money out of her bank to put into an online bank or a virtual bank that has no branches? And the reason is because they have better rates. And why do they have better rates? Because they have no branches, so a lot less expenses than a financial institution like a bank or a credit union that has a lot of branches. So they give that back to customers in terms of higher rates. So I've got a slide up here showing some virtual banks. EQ Bank, Tangerine, of course, owned by Scotiabank. Oaken Financial, owned by Home Trust. Saving Financial is a digital brand of large First Ontario Credit Union. So if you look at deposit insurance, the deposit insurance is per individual, not per deposit. So Maggie's question on, can I get 5 deposits of $100,000 each and have them insured? No, you can't. In your own name, you can only get 1 deposit at $100,000. Saving Financial is provincially regulated through First Ontario, so they actually have deposit insurance for $250,000. And if you look at those rates there, if you compare those to the bank rates right now, I looked at them on February 1st. 3% is what you're going to get for a 1-year term deposit or GIC, and the digital banks, look what they're getting for a rate. So again, Oaken and Saving Financial, you get a 1-year rate for over 5%. Okay. So that's what I talked about. Cold day, you get a hot rate.
There you go. Volatility when it comes to online banking, is there a bit more volatile?
No. Again, because they have such low expenses, and it's also self-serve though, so take that in mind. You don't have a branch to go to. You got to do the work yourself, but you'll get rewarded in higher rates.
Good stuff. Email Dave questions at FinanceFriday at First Ontario, or send them through Twitter, Finance_Friday. If your question is selected on your gift card from a local business in your community. Good work, Skirman. We'll see you in a couple.
Stay warm, Timmer.